Hi, we are here to discuss our latest offering, PMS Multi-Manager India Equity Opportunity Strategy, a portfolio of diversified mutual fund schemes. In today's world, there are abundant investment opportunities. Data is democratic and information is abundant. Sometimes, overload of information may lead to confusion rather than offering a solution. With hundreds of mutual fund schemes and evolving economic cycles, one can face the problem of plenty. To help navigate this, we came up with multi-manager strategies. Joining me today is Sandasani, a key member of PMS AIF Equity Investment Team. Welcome, Sandip.
Thank you, Amol.
Sandip, can you tell us what was the thought behind launching this multi-manager strategy?
So you are correct, Amol. Mutual funds were always there. Mutual fund schemes were always there. But when you see over a period of time, the number of investors, number of options for investors have increased substantially.
Yeah.
The second thing is sources of information also have increased substantially over a period of time.
Correct.
And specifically in digital era today, if you see it is not increased, actually it is multiplied. So that way, the problem for investors was allocation, selection, and sizing. Allocation in terms of how much market cap you should have, in terms of large cap, mid cap, small cap. Uh, uh, Allocation in terms of even sectors and theme became a challenge for investor. And if you have that sector, but if not at significant weight of the portfolio, then probably the sizing also becomes a challenge. So to resolve all this issue for investors, we came up with multi-manager strategies starting in 2016. We started with strategy which is known as ICICI Prudential PMS multi-manager core equity strategy, which invests across diversified schemes. Some part of the portfolio goes into even sectors and theme in case if you find anything interesting. Subsequently, in 2018, we launched multi-manager strategy, which was investing only into sectors and theme, because in sectors and theme, there are two things which are required. One is entry, the second is exit is also equally important.
Yeah.
So to resolve the issue of both entry and exit, we came up with multi-manager thematic strategy in 2018. And as you rightly pointed out, recently we have launched ICICI Prudential PMS multi-manager India equity opportunity, which has flexibility to invest across EMC.
Yeah.
So that's the new one from multi-manager franchisee.
So you are saying your job will be slightly difficult now, and just to pick the right funds from the other AMCs. So there are around 500 plus diversified mutual funds available in the country as of now. So how are you going to choose the one? Do you have a model or a framework in place?
You are correct. So now you have multiple AMCs, more than 45 AMCs. You have more than 500 schemes from which we are trying to build a portfolio, and we have tried to build a model. Now you are in model what essentially is going, or what we are trying to find out of the universe which is available. We are looking for schemes which have one of all performance, which is very important, but what is the consistency of performance is what we are trying to focus on. The first part is performance, but the second part, which is equally important, is how much risk these schemes are taking to deliver that performance. So if you are taking undue risk, then probably you in a way will score low. The third part, which is again very important, is how much exposure you have in a particular style. So like value, growth, quality, there are many multiple styles and they do well in different phases of the market. So that way, to have optimal mix of this style is also we try to focus on. The fourth is dynamic management. Now obviously there are phases when a particular market cap will do well, there are phases when a particular style will do well, there are phases when a particular sector will pull up the overall performance of the market. And to dynamic management becomes equally important. So let's say if your valuation of particular segment becomes expensive, then you have to gradually come out of those segments, and wherever you have a favorable view, you have to increase exposure. So dynamic management is what we try to focus on. The last part is, in every phase of the market, there will be few sectors or themes which will look very interesting. If we have any of that kind of opportunity available, we try to actually invest into those themes or sectors also. So that is essentially the model which is trying to address the need of allocation and selection. The second part is sizing. And for sizing also, what we have tried to do, we have tried to actually build a model in which we are trying to see which combination can give us low volatility, which combination can give us maximum sharp. In a way, for let's say ABC scheme, you get a range of weights. For one part, it can be 12%. Let's say for low wall, the weight can be 12%. For max sharp, the weight can be 18%. The final decision is taken by a fund manager here, where we try to see uh, the combination of a portfolio manager along with model, which is trying to actually decide the weight for the portfolio.
When the allocation, sizing, and selection has been taken care, so how many typical funds you're looking to invest in? Is there a number to it?
Right. So again, here you have to have a optimal diversification, and for that we believe when you see the portfolio, you will find at least 5 to 6 diversified schemes and two to three sectors or thematic schemes. So that way, the number of schemes can remain in range of around 8 to 10. In case if we don't have any theme or sector looking very attractive at a particular point in time, the number of schemes can be around 6 or 7. So that's the number of schemes you can expect out of it.
Any thought on if some scheme is not performing well, or probably there are other 490 odd schemes which you haven't selected are doing well. So is it like you revisit very frequently your model to check which one is doing well, which one is not, and so that the replacement happens? How is it?
Yeah, so it's very important, and that's where the framework is also using dynamic management in terms of any particular scheme which is not doing well. We try to see what are the reasons behind it, and if there is a requirement of change, we do that change. In terms of management, active management, how it works. So there are two parts to the portfolio. One is core, the second is thematic. The core part of the portfolio will consist of more diversified schemes. So that we try to hold them at least from a 1 year perspective. At least minimum 1 year is time frame which we try to hold on, so that we don't pay exit loads. The tactical part, in which we'll have thematic or sector schemes, in case if we make sizable return in a very short period of time, we are okay to come out of those schemes even prior to 1 year, in case if we are making substantial alpha even in shorter period of time. So that's how the aim is to balance between dynamic management and the tax liability which investor has to pay.
Fair enough. So, but the tactical calls you take, is there a, do you have any example here when you get in or when you get out of a tactical calls, and with some typical examples can elaborate?
So the thematic multi-manager which we have obviously is investing only into sectors and themes, so that way all points in time we have view on a particular sector where to go overweight or underweight, and we are trying to actually find the best ideas from the thematic multi-manager, and we are trying to have some part of those ideas in the diversified portfolio. So multi-manager core also has some part which is going into thematic, and the new one, which is multi-manager India equity opportunity, also will feed few ideas from that ideas which are available from thematic multi-manager.
Typically, once you have answered this whole portfolio construction, now who is this portfolio strategy for? Who's the end user you're thinking of?
No, I think any investor. So this strategy is designed for investors who want to actually have an active management for their mutual fund investments.
Okay.
This strategy is aiming to build a portfolio which is invested across market caps, across sectors, across styles. So that way this portfolio, we believe, can bring a lot of stability to the mutual fund investors portfolio, and it can optimize return for investors over a period of time. So I think the way we have tried to build the model, the way we are trying to identify schemes which are available across AMC, we are trying to actually get a combination of right market cap, right sectors, and right style. At a portfolio level, it is diversified so that it can deliver a good return experience to investors over a period of time.
Fair. What I understand from Sandip here is this is an offering for those investors who typically are owning 20, 30 mutual funds in their portfolio on a scheme level, but they don't know on an aggregate level how their schemes are doing. So here is a solution which is having a tight portfolio of 10, 12 names, be it a retail investor, be it a HNI, be it a family office who doesn't want to get into management of PMS strategy. Here is a scheme which is professionally managed by a fund manager, overlooked by him on a daily basis. So I think so the solution appeals to everyone in that sense.
Right.
So to sum it up, India Equity Opportunities offers diversification and dynamic management. Thank you, Sandip, for such an insightful session.
Thank you.